I told us we'll be covering these. We'll be looking at what does each time frame tells us, which side of the trade you are in a trend or in a pullback. What is change of trend? How is that different from pullback? And what types of traders are you? Then the trade and risk management. Those are the things we'll be looking at. Trade view, type yes. If you can see my trade view, type yes. Type yes if you can see my trade view. Type yes, can see, or you can just say can see. Type can see. Oh, good, 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 good. All right, good. So we're back on. Now, like I told us, if we look at this chart, these are areas you must concentrate on the screen on the trading view. The currency pair icon, the time frame chart column, which is other week. This one is in a week. Then the candle. The candle that I use is Heikin Hashi. So you have to pay attention to that. I use Heikin Hashi candle because of it filters out noise and irrelevant information that actually could be confusing. So it's smoother and it's clearer and it's cleaner. That's why I use Heiken Hashi. So you are going to be paying attention to this. Now this is weekly candle, so I have to zoom. I zoomed out for us to see what the currency pair has been doing since June 2004 till date. Now, like you can see that the price moved from up here down to this place. This is a downtrend, and it moved from this level to this point. That is an uptrend. It moves from this level to this level. That is another downtrend, and it moved from this level to up this level. That is an uptrend. But if you really want to know, from this level the price made it up. From this level, the price actually made it up to this point. It means that from the lower point to the higher point here, the price actually was in an uptrend. So it went up and the price made it a bit down. So this a downtrend will be considered has a pullback on this higher time frame of a week. It's a pullback from this higher time frame of a week. It bought, it sold, then it went, did some consolidation before rising up to this point. So from here to this level is an uptrend, is a trend. Then this one moving down is a downtrend, but in a higher time frame is a pullback. Now, moving from this point down to this point, that from this point down to this level that we have the price, which is the lowest level here, is a downtrend. So it slid down to this point. So that's a downtrend. But in the middle of it, you have a zigzag pattern. It went down, it went up to this point. This is a pullback. Down to this point, went up to this point is another pullback. Went down to this point, up to this point is another pullback. Down to this point, up to this point is another pullback. Down and up is another pullback. Down and to this point is another pullback. Now, before the price made it to this point, there are things I want you to see along the line as you are just focus. Focus on the screen. Focus on the screen. Focus on the screen very well. It's very important. The price moving from this point to this point is a downtrend. So a pullback, the height of it, most of the time, you don't expect it to get up to the level you were coming from. So from this point down to this point that you had a pullback, the pullback is not even up to it, so it's just at this point. Then it went down, a pullback. Now, see this actually gained lower. It was at a lower level at this point, a lower level compared to these 1, 2, 3 points. So a lower level here compared to this point. So, but what the price did was to move in this dimension, to even go above this pullback. And these are things that happens in the market that if you're not careful with what you know, you're going to lose money, because you don't expect, when you see this kind of a move in the market, you will think, oh, maybe the trend wants to change. In a pullback, you have a comma sign or a mark sign. You know, a mark sign that you use to mark, oh, good, you're a good student. When you're marking a paper, there is a shorter arm and there is a longer arm. That is what you expect in a pullback. The longer arm is in the direction of the trend of the market, and the shorter arm is a pullback, is never equal or at the height of the mark of the other one. But where you have a V is the two arms of a V, they are at equal level. At any point in the market, you see a V formation. It's an earlier signal that the market wants to change trend and is no longer a pullback. Now, at this point, consider that you are marking down, and this is like the shorter end, which is a mark. And this one also go down, you mark, and this one also is shorter arm from here to here, shorter arm of this mark sign. Then from here to here, you move down, you expect that this one should not go up, but come down. You see, at this level of the mark is what you should have here. Consider this height and this height. But you have this extra on top of it. So it's confusing, and it will be confusing for most traders, and they're going to lose money. Most times in a trending market, the shorter arm will not be up here, it should be down. But more or less, these are things that happens in the market that people, there's no how you do it, you will lose some money and you gain most money. So all you can do is to gain most money, lose a little. So now from here, it went down. The plateau never got to this point again. It went down. The plateau never got to this point again. Then it went down. Now at this point again, it rose as if it was going to buy and change. Can you see the trend here? It has changed the trend again shortly, and it fell to this point, the lower level, until this height. So I just wanted to see all that. Then it bought to this point, then fell down again. That's a downtrend, and this. Now, we need to get an information. I told you last week that usually this particular black curve that we call EMA 200 on a weekly chart is to guide us as to what kind of trend are we. What kind of trend are we? So in case you begin to have funny things like this that shoots beyond a pullback to tell you that it's like changing of trend, you have to be very careful. And this curve will guide us. Most of the time it will guide us. When the price is below this curve, this EMA 200, we believe that it is in a downward trend. When the price is above this curve, which is EMA 200, we say it's uptrend. But when the price is wrapping around it, like as you can see, around it like this, up and down around it, and up and down around it here, and that's a sign of consolidation. The price has not picked a side, and most of the time you can't say you are in a downtrend or an uptrend, so you trade with all caution. And it clearly lifts above it here, so you can say this is an uptrend. Now the price is now using it as a support on its feet here. A support. So far it's been a support. Now with what we are seeing clearly on this currency, Euro New Zealand, it's clearly an uptrend for now. So take that home. The information we have on a large time frame is that is in an uptrend, which means this market is buying. Now you can see from the time it crossed there, July 2017, it has been buying. July 31st, 2017, this market has been in an uptrend. So you can see. You see my hand here, then you follow down to this point. This is the date. July 26 here. Yeah, June 26 here. So up to date it's an uptrend. And when you are trading like this, it's better you stay on the side. Emmanuel, please mute your microphone. Emmanuel, mute your microphone. You are disturbing us. So it's mute your microphone, Emmanuel. And so it's better you stay on the side that is buying. You never can tell at what point it will get to the lower point and the higher point. The price will determine that, or the big boys will determine that. You can't tell at what point the price is going to start buying or stop buying, or other way around, start selling and stop selling. You don't have control over that. And since we don't have control over that, we also have what we can use to save ourselves from explosion or from extinction. So we have what we can use to save ourselves from explosion or from extinction. And all the tools that we have at our disposal, we must use to our own advantage. I'm going to now expand to see what the price is doing. We have established the fact that this is in an uptrend. So when something is an uptrend, the long arm has shown us that it is longer up and it's shorter to move down. That is an uptrend. It is longer to move up and shorter to move down. That is an uptrend. So you can see with my zooming out. With my zooming out here, so you can see it moved up and down. Now, on my screen, this candle, what do they really represent? What do they tell us? The only thing they can tell us, it's more or less like a receipt of what? Of engagement, a receipt of transaction. So it's not as if you were directly involved in negotiation, but it's a receipt of transaction that are taking place, not what is going to take place. Get that? These candles are nothing but a receipt of what had happened, not what is going to happen. Now, studying the receipt, we can make a prediction of the probability of what the price is going to do. And that is why, if you are trading, you must sensibly commit your fund to trade in such a manner that you don't want to lose your money. Now, if you look at this chart, the price got here and they went as up as that. And at this point, you are seeing this candle here that is still, it bought. But there had been an activity to sell. Selling to force the price to this point, usually there had been selling or there had been sales, and which might be difficult for anybody to pick because you are looking at the receipt of transaction, and the candle told you it bought to this point and it bought to this point and it bought to this point. But to force it up from up here down here, oh, the sellers that are red had been there. So you can now see that it might be difficult for you to join the market from up here to get to this point. And if you want to know how much pips you would have missed out, I want you to listen attentively. From that point up to this point, before it showed clearly that, oh, they are selling, you would have missed out about 1,500 pips if you are looking at this candle on a weekly basis. You would have missed out 1,500 pips. That is huge. So we have to look at these candles. What are they telling us? What must we do? But the thing is that whatever kind of trader you are, we want to at least have an early entry as possible, as early as possible, and have an exit before they change it. They can change anytime, they can move anytime. So studying the pattern to see what the big boys are doing is very crucial to us. Otherwise, you will gain money, you will see profit like this. Before you're very high, it will turn to negative. And because you don't know what they are doing, your $40 will just become minus $20 again. You ask yourself, maybe they are moving again. They might not move in your direction again. So listen to my analysis to pick one or two things. As a scalper, your stop loss, most of the time, it's probably about 5 pips, and you want to gain 10 pips, because risk to reward ratio, if your risk is 1, your reward must be 2. If your risk is 1 to 1, you are a foolish man. Or if your risk to your reward is like 1 to half, you are stupid. So it's always good to do risk of 1 to 2 or more. All these people, they know that as a scalper, your risk in terms of pip is usually around 5 pips or thereabout. And if you're a trader, a day trader, they know that you don't want to risk more than 20 pips as a day trader. Maybe at most 40 pips. And they know that as a swing trader, you don't want to risk more than 80 pips. And as a position trader, maybe you want to risk 200 pips. They have all that information. They watch you. They know what you are doing. So they are happy watching you enter at the wrong spot. They are happy watching you entering the market at the wrong spot. Because by the time they start with their hammer, they will chop you out. And from the point of their own entry to the point where they are moving you out might still be within range. If you had wanted to use your 1 to 1 or 1 to 2 risk of 1 and reward of 2, but with the right entry, it will pay you. No matter what they do, it will be probably, if you are joined here and you can still have your 40 pips, it will pay you. But when you are joining here, they can move you back and they'll move back again, forward again, your house. But I will show you more of that. For now, I want you to concentrate on the last candle I'm going to show you. The last candle here tells you on a week that this market is selling. The market is selling. Now, I'm going to change the information that we have here is the market has been selling. And if you're going to use that like that and take it as if, oh, it's going to continue to sell, you're on your own. It is not what you see. This is just a receipt of transaction. But I will tell you later how you can interpret all these candles. So, it's selling here on a week. If we change to a day, let's see if it's going to be selling on a day. So look at the last candle on a day. It's buying. Look at the last candle is doing what? Is buying on a day. So you can see that. Let's look at the last candle on 4 hour. We'll be looking at weekly, daily, 4 hour, 2 hour, 1 hour, 30 minutes, 15 minutes, and 5 minutes. So on a 4 hour time frame, so we already have a shocker that on a daily time frame, it's what? It's buying, but the week said is selling. On a 4 hour time frame, see what you have. The last candle tells us we are doing what? We are buying. And you are entering. We are selling. So, it's buying here on the 4 hour. Let's look at 2 hours. What is it telling us? The last candle. Well, you can still say, the last candle says on the 2 hour, I'm what? I'm buying. It's very small anyway. Very small, but it's buying. You can see that. Buying. That is what it's telling you. The 2 hours. Now let's now go to 1 hour. The 1 hour now tells us that now the 1 hour tells us that it's selling. A day candle said is buying. 1 week candle said is selling. A day candle said is buying. 4 hour candle said is buying. 2 hours said is buying. Now 1 hour said is selling. Which one is this? Let's look at 30 minutes. 30 minutes tells us, it's selling. Look at the last candle. 30 minutes said it's selling. Okay. Let's look at the 15 minutes candle. 15 minute candle said it's selling. A week candle said selling. Daily candle calls buy. 4 hour candle calls buy. 2 hours candle calls buy. 1 hour candle said is selling. 30 minutes candle said is selling. 15 minute candle said is selling. Let's look at 5 minutes. And 5 minutes candle tells us is buying. So we have 4 buying and 4 selling out of 8. Now tell me how you want to engage this market. Where you have conflicting receipts on a different time frame. So no matter how you want to engage this market, you must be able to interpret the kind of information the different time frame receipt is giving you. We have established something, that the summary of our candle, I said with reference to the last candle, the summary so the summary was like on a week candle, it told us sell. The daily candle told us buy. The 4 hour candle told us buy. The 2 hour candle told us buy. And the 1 hour candle said sell. The 30 minutes candle said sell. The 15 minute candle said sell. And the 5 minutes candle said buy. Now, these informations are useful for all. The position trader, the swing trader, the day trader, and as well as whoever is scalping. I cannot understand anytime you are looking at time frame or chart, most likely because you don't understand how the market operates. Whatever we read, we look at analysis. If I'm doing a swing trading and I gave you a signal based on swing trading, and you go to 1 hour and you are looking at 1 hour or 30 minutes and you saw something that is different, then you will now be shouting. Probably because the move is against you. The market will definitely move against you, because the market is designed to do that. So you now have to understand what is actually the market doing. If you are trading on the trend and the market appears to be moving against you, you should know that it is designed to do that, because after all, it's a law of buying and selling, demand and supply. So if you are in a trend and the market is moving against you, most likely the market is pulling back on that time frame. You must know that. The market is moving, doing pullbacks on that time frame. You know, at times we talk about news affecting our trades and the kind of volatility that you see when you are doing trades. News does not affect all this daily news, because if you go to Forest Factory, you will see Forest Factory news and all of that. News can only affect, a day news can only affect, take that and put it somewhere in your head. A day news can only affect a scalper or a day trader. After all, the kind of peep they want to risk is so short. Most news will fluctuate within 50, 40 pips or 60 pips. And there is no way they will not eat a scalper, because the risk a scalper want to take is so narrow, maybe about 5 pips or 8 pips that he wants to risk. There is no way the news will not affect him. A day trader that wants to risk between 20 and 40 pips, there is no way the news will not affect you. I hope you are taking that. But a swing trader, once you have your pip risk around maybe 80, most likely you will not be affected by the news. The news can move against you and you can see some red, but after that the dust will usually settle. The last person that the news will affect at all is the position trader. How would it even affect the position trader? The person that has like almost 200 pips or 250 pips as a risk, knowing what he wants to eat. So for a position trader, might not. Now, what other sort of things now affect the swing trader ultimately, or a position trader? Events of life, unfortunate incidents definitely will affect all across board. Like the price of oil crumbling, tumbling, is going to affect because the market will behave abnormally. Just like the COVID-19, the market will behave abnormally. But after the initial abnormal behavior and volatility, it has settled. The dust had settled. On Thursday, Friday, we witnessed some volatility, very terrible volatility. Such volatility can only affect a day trader or what? Or a scalper. But because of the consolidation that has been happening for some time in the market, so we were condemned to the zone of day trader, not a swing trader. We're managing a very narrow consolidation of about 150 or less than 150 pips, or maximum 200 pips. For us to gather about 296 pips from USD CAD last week, we were on that trade for almost 2 weeks. So that was not more or less a generous. We were trading a generous consolidation of about 400 pips or thereabouts. That was why we were able to have about 296 pips from USD CAD. But the news that we noticed with JBP pound yen on Thursday and Friday was because we had been condemned to the zone or the realm of a day trader. So when you now see volatility, definitely it's going to eat us. We must understand that. But we can always bounce back. Now, let me go through it again. So how I interpret my candle now matters. I've talked about these 8 candles giving me different information. How I interpret these candles now matters. Now, how do we interpret? How do we interpret is very important. How we interpret. The only thing we must be interested in at this point, when and how do we enter the market from this level? And how do we exit from this level? And when the market is coming down, how do we join this market to sell a pullback? You don't want to continue to buy, because if you buy to this point, you will see your money, oh, good money, blue. Your account is blue. All of a sudden, account begin to go down. So the market is not just to live, it's not about leaving your money for long here. Do you understand? You must know, for me, as a swing trader and partly a position trader, I want to enter the market here and look for an exit here, and again try to see if the market is doing a pullback. So because this is a pullback, you don't expect a pullback to come back to this base. Like I told you, even on a higher time frame, you don't expect the market to tick up, and the short arm will be short, and so the market will not get to this level. At most, maybe the market, it's about at the level it will get to here. If you look at this, level of the price, maybe the market will bounce back around here, or the market will bounce back around here once they get to this level. You have to look at what the price had done in the past, the level the price had been in the past, before you make a forecast of where the price is likely to turn. But if you want to look at the height here, the market is almost there. So you can see my line crossing. Let me just give you the line for you to see. So at this level of the price here, at that level there, you can see that the price actually entered this level and they bounced back. This price line was like a resistance for this actions here, but now the price is almost there. The price may turn back here, or the price may also make a U-turn, maybe around this level. This is another level the price can make a U-turn. So anything between here and here, we expect the price to make a U-turn and continue to buy again. But all we need to do is to pick signs along the line. Now, when you have big candles forming to indicate a particular trend like this, and at some point you now begin to have a short candle. The short candle tells you a force is moving against the gravity, or force of gravity is pushing the price back. And how we see these on time is another thing entirely. We're going to see how we see it on time. So, but for here now, the price is doing a pullback, and we are in a pullback. So, a pullback selling. But will this continue to sell? I'm weary because I can see that the price is approaching this support, and maybe it will get to this support. I'm not worried if the price makes it down here. All I can do is to follow whatever the price is doing. So I need to follow. Now, listen to this. On a 4-hour candle, the price bought, and on a 4-hour candle, on the weekly candle, the price is doing a pullback. Now, we are not going to see what the price is doing on this particular week. Because on this pullback, we'll take each week also, and we analyze each week. Because each week also will do its own pullback and an intentional movement. So the intentional movement that is happening here really is not a buy, it's a sell. So if you see anything against this move, it will now be a pullback on a short time frame, which is a buy. Now, for you to have this body and for you to have this particular slender hair or thin like hair, now this is due to the activities of buyers. They were forcing the price up. See, they brought their strength to equal, and this is what you will see when they are almost equal. This is what you see. Now they are trying to force the price down, using their might and strength to force it down. The buyers are pushing back. So the price got to this point, the buyers' activity forced it up here. You must understand that. Again, they push it from up here, they went a bit down again to get below here. They shifted the base here to this level. Now, they were moving down, the buyers also pushed back on them. Now, this one formed. When you begin to see that the body is becoming smaller, it's an indication that the sellers are losing their strength and the buyers are coming back into the market. So, of any move here, there's always a pullback against sell. The movement here, it was a pullback against buy. Now we are seeing this pullback, and each week the buyers will test their strength again. So a pullback against them. So let's now analyze this particular candle. How many days candle we are going to see? Because 5 days in a week for the market. So we're going to look at 5 daily candle to sum that up. I pick day. Now, so the 5 days will be 1, 2, 3, 4, 5. So that is the activity that we noticed. These 5 days. These 5 days here. Okay, including this one. So that's the 5 days. 1, 2, 3, 4, 5. Yes, this one. 1, 2, 3, 4, 5. So the 5 days, the activity is what we noticed. So what we saw here, let me go back to week so you will see. Okay, something like that. I'm not a good drawer. So this particular week now let's see on. I want you to understand how the market operates, how we read the candles is very important. So the 5 days will be out now. Now, this is the 5 days. 1, 2, in fact, it included this 1, 2, 3, 4, 5. Okay, 6. So it brought in the sixth one. Now, so the activity against them, the buyers are already in. So you can see the level the buyers are that actually made it thin. So the buyers pushed the price even almost above the crest here. Can you see the level? So they went lower here. The buyers got in here and pushed the price here. Okay. Now, I want you to see something again. Just follow. It tells you that largely for all the buys, this was where the move started. They bought and the move started, so they were selling and a pullback, they were selling a pullback. That's what you notice, and a pullback and a pullback. So more of red, less of the green. So in a pullback, that is what you see. Maybe the pullback is coming to an end. That is what we have to see. Then I want to analyze this particular one into 4 hours. So let's do that. Let me select something. Let me change my color to, let me select this for you to see. So we concentrate. We concentrate on this. The week was broken out 2 days. On the week it was selling, but the buyers were coming back to reduce the size of the candle. Now on a 4 hour, you will see 4 hours in a day. So let's go to 4 hour candle and see what it's doing. Good. I hope you are following me. This is our week into 5 days or 6 days that we have in the black. Now the zone here, captures like 4 hours. So might not be perfect. 1, 2, 3, 4, 5, 6. So about 6 with this that is crossing. So it's still about 6. So on a 4 hour candle, what we see is a buy. What you see is a buy. We can go on and on to analyze. I want you to follow. We can go on and on to analyze and see what you will now see on. I won't use 2 hours now. I will go to an hour candle and break this one down into an hour candle. I don't know if you are enjoying me or I'm boring you. If let me use this. Let me pick this. Oh, how do I draw this? Okay. I'm not a good. Okay. Good. So that we should see like 4 within that frame. We should see like 4. Good. We should see like 4 within that frame if we go to 1 hour candle. Good. We should see like 4. This is 1, 2, 3, 4. Now, this is a pullback against a pullback. A pullback against a pullback and against a pullback. Initially, it was buying before this point. It was buying somewhere at this point. Then we now pick the last week. Okay, let me try to zoom out so that you can see everything captured. Now, the market started here to buy to this point, and it was now falling. This is what we saw. And we are here. So, a downward movement, a pullback, a downward movement, a pullback, a down. Forget the EMA, whatever is not correct now, because it's on a smaller time frame. So we don't use it until we are using a weekly candle. So a moving back, the momentum is downward now. So you now see a pullback. Now this one went up as if they want to force the price back up, and this one hand. So it's falling downward again. So if you look at where the price is at the moment, the price had gone past here, this level, this level, this level, almost at this level. So it might be telling us, oh, I'm getting to the end of the pullback to sell. Like I told you, this might just be at the point they're going to turn back, or they might make a movement one more time to get to this point. And if they're able to break this one, they will certainly turn back here. But it's more looking like, oh, the price is going to reverse to continue the normal trend of buying. And this, of course, has been going on for quite a while. And so you don't want to be out of the market not doing anything. So if we are on the trend, we want to buy the trend. And if we are doing a pullback, we want to sell a pullback. That is the ultimate, that is the aim of trading Forex. We do stuff on both sides, and that is what the big boys will do. Everybody is doing it. Everybody is doing it. So this is where we are. And if you now break this one down into 30 minutes, this 1 hour into 30 minutes, like we told you, it's also selling. And in 15 minutes, it's selling. How do we interpret? How do we interpret? With what I had shown you, how do we now interpret? My analysis most of the time, it's I switch to 1 week. This is weekly candle. The information I have gotten here is that it bought, but now is doing a pullback. Now, from there, when is this thing going to end? I switch to my 4-hour candle, which is very important for me to know when it's ending. When something is buying and you begin to see this consolidation here, there are important things that you must do. What we do is to, when you see a consolidation zone, you try to draw the highest point of the price, because this 1, 2, and 2, this 1, 2, and 3 will form before this. So each time you're in the market and there is consolidation, just try to draw a line above where the price cannot pierce through. The price went down and they could not go through it. You draw a resistance above it. and the base of it, where the price could not pierce, or which is the support, you draw a line here, you draw a line here to watch what the price is going to do. So you are trying to wait. You are laying wait for the price to do whatever the price is going to do, to know what you are going to do next. So that is how I analyze. That is how I analyze. I wait for the price here. What is the price going to do? The price was selling and went down to this point and could not break this level. So it could not pierce. Okay, it broke this level down. It could not go further. So I draw a support here and I draw a resistance to watch what the price is going to do next. If the price breaks this further, fine. If the price does not, like this now, the price moved up. Remember I told you, when the price is going to break up here, they won't tell you when they're going to do it. They will never tell you when they're going to do it. They will never tell you when you're going to do it. But one thing that you must be aware is that the price will make this move to go up and get up to this point. The price that is showing that is already tired at this level. The price is tired at that level. So I want to see if the price is going to move beyond this level or not. Watch this area. The price was in that region, went up, formed a consolidation zone, then moved downwards. So, and I see the price moving, just broke out here. This is another level that you want to see in the past, that level. A level here, but this area of the two, let me change the color here so that I won't confuse you. Let me change that to this one, and let me change this one to this. Good. So the price could not move, then break this. There's a level that the price used as a support here, and also as a support at this point. Support here and support here. The price had gone past this and past this level. The price is presently here at this level. Most of the time, what happens to you if you want to trade this is that you are expecting the price to break here so that you can follow the price to continue to buy. The price will not do that. The price will never do that. The price will not just break and go on to continue to. The price will not do that. The price will still want to come back to this level. Don't be surprised. The price will make it down to this level, to try this level C. Done and dusted. I have defeated you. So the price will want to do that or B. That's the word. The price will want to do that or B around this level, break in here, then to now begin to move up. That's the way the price behaves. So, for me trading, it gives me an opportunity not to just to follow the price because the price is moving. But it gives me an opportunity to look for a good entry point because I know the price will still want to come back to try this area before eventually moving past it. And to be on the safe side, what will make sense for me is that I might be afraid that the price might not come to this point. Okay, the price had made this place a base before, like a support. Okay, let me put my buy limit here. Because I know the price will come here to do what? To want to retest this area. I can't continue to buy from here. And if you enter buy around this area, you'll be surprised. you'll be surprised what the price will do. Price will now draw you into negative because you are berry. You don't know how forex works or operates. Price will just move and move back and get to this point again, and it will draw you into how many negative, how many pips negative? Draw you into almost 321 pips negative before making move up. And that 321 is enough for you to lose money. Trust me. It's because you are not trading correctly. So as a swing trader, on 4 hour, on 1 hour, you are seeing things more than a scalper or a day trader is doing, is seeing it. Because the price is going to still move down in this zone to pick you to now move beyond this zone. So I engage each level when they form a consolidation zone to see, okay, what is the price going to do next? Like, if anybody had wanted to trade this point, this zone, this was what like the support here, and this would have been like a resistance here. So that was the height which is the resistance here, and which is the support that the price is resting here. So if anybody had wanted to trade this level, the best to do, you knew that the price actually was falling, and the weekly candle had told us that it's coming very close to the end, though the daily candle said buying. So the daily candle telling us buying means that they are trying to push against the weekly candle, what the weekly candle is saying, and the weekly candle is becoming smaller and smaller. So which means that they want to change back to base buying. So they might not go lower again. If they are going to go lower again, this is the lowest point. So I expect the price to break through here before I know they want to continue to sell on a long time frame. But it's like they want to reverse, and I'm following. But here, they got here, I looked at it, they made this move, they couldn't pierce it. They did as if they were going up here. They went up here, and they got to this point. What did they do? They moved down. Even if you had wanted to buy here, say, okay, they are retesting. Of course, they will retest around there, buy to this point, and at this point, they now went lower and lower and lower, because more or less it was a pullback here. When you see sign of an intentional move, you will know. And that is why it's always good to wait for at least, when you are not scalping and you are not doing day trading and you are on a 4-hour chart, allow them to make their move and whatever they want to do. But when you see this 1, 2, 3 and they had 1, 2, 3, 4, they are still moving down. And they had one against it here and they did this, they are still moving down. When you now have like this, a show of strength to push up and to push like this, they are changing trend. It's most likely they want to go back to bullish move. But as they are going up again, they will also be doing what? They will be pushing back. Only that they might not get to the lowest level here again. They might get around here or around there and move up again. So we will now wait to move in here. Now, let me go back to the weekly candle and tell you how I will know how to engage the price to come down when it brought to that point, and what I'll be watching for. Good. Now, what usually I want to do is to draw a resistance to the height there. Let me use the color red for it. So at that point here was the highest point of the price. Usually that is what I want to do. And for me to know where I'm going to concentrate on. Let me use something. Let me use this. Good. Let me just put it here at this point. Good. Now, I know this is the point I want to concentrate on. That's the point I want to concentrate on. And how I want to work around there. That's March 16th of March. So let me now switch back to daily candle. I would have used my 4 hour, whatever. I will still go to 4 hour on that level. Good. So at that point, that's still the point here. Let me now switch to my 4 hour candle and see what I can get from here. Let's switch to our 4 hour candle so it's coming out. Yeah. This is the point here. You can see the gap. So at this point on my 4 hour is always very good marker for me. So I would have plotted this at first when the price got to this point. No, at this point I would have plotted it to see if the price will go further. Price didn't go further. It went beyond here to get to this point. Okay. Then I'll be waiting on 4 hours to see the movement of price around this area. Then when the price went down and did this, what I would do again is to put this one on top here. And what I'm seeing is that the price is not even going beyond it. So price got to this point, bounced back, and went back. It could not pierce this again. It's telling me that the price is moving down. So once the price breaks this level, I know that what is like the price is this thing has come to an end though. It has come to an end. I could even do something and put this one at this level. If I don't want to be too adventurous, the level I will enter this market, it is this particular level. This 4th level. That is where I will enter this market because I know this one went past here. This one was in the middle. So I will put one here and one here. So this is the one I will use to judge myself if I'm going to sell. So I will do away with this. Then I'll be watching the price activity around there because the price had gone past this 1, 2, 3. Now the price could not pierce through this one. So I will be waiting for the day the price make it down here. Mark you, this week that you saw, like Owu candle, this week here, if you look at it on 30 minutes, many candles would have formed under here on 30 minutes. Many candles would have formed here on 30 minutes. So the price, I will wait. It broke it. I won't enter. There's no point rushing. There's no point that you are rushing. Oh, the price is moving away. Don't worry. The price will still come back there because they just broke it. The price will still come back there to pick you. See what the price did. It went down. And the price did how many pips down? From here. I hope you are listening to me. Price did, because you don't want, that's 900 pips. You don't want to lose money. Price did that to do what? To now move back up, to now trigger you in. The price will pick you here. Can you see? The price now use it as what? As resistance. If I want to be careful, because the price is, I can even pick my whatever below, just a little below it because I know it's selling. I might just pick it a little below it so that Ali catch me. So the price will still catch you all the way and continue to now sell. And the price selling from this last to the point that, let's see. To this point, from here, where if you had entered to this point, you would have done how many pips? You would have done from here down to this point, you would have done about 1,200 pips. Is that not good? Because you have confirmed the movement. You don't just wake up in the middle and just enter with the price. Let the price move. That is the power that you have. Because you know that their behavior, they will move and they will come and retest it. But you want retest it, wait until they retest an area. Don't follow the price. You will lose your money. When the price is retesting a particular area, the price cannot do 30 or 50 pips against an important level. They forced it back. So at the level that they forced it back, price usually they don't do 30, 50 pips above it, except Teshuba Wonoja, devil. So the point is, you must know the way we interpret these things and how we make entry. So that's the lowest level. The price got to this point, and this has been the lowest level, and it's like the price is doing as if it wants to push back. You can watch this particular line, this particular purple. Watch it very well. I want you to watch that purple. See, something is happening. The price fell from this height, and we joined the price at this point. From this height, it rose up to this point. We joined this price at this point. See, gradually moving down, got to this point, doing some consolidation. The price is moving back. The price is at this level. Once it is able to break this level up, it is buying. It will continue to buy and probably go beyond. It will go beyond this level. And once it gets here, we want to see if it's going to go beyond this level. So a smart Oloja trader, we want to probably exit here. But this price will not just continue to, because most of you, all you want, continue to move now. Move. We are thieves. Continue to move. The price will not move. The price will get here. This is an important area of what? Resistance. The price will fall back to test. If not this level, the price will still get back to this level to continue the movement. So watch for this thing, because I'm educating you, I'm teaching you. Watch for what is going to play out like that. That is what it's going to do, because it is now rising above here. When you see price move beyond a 4-hour resistance here, which is or support here, this is a support, this is a support, this is a support, this is another support. What are you waiting for? 1 support, 2 support, 3 support, 4 support, and the price is had moved beyond. Trend here to change. I can tell you the trend had changed. It will take Obatala Shango and Orunmila Papọ̀ for the price to come here and break down. The price had gotten to its end, from what I'm saying. Shango, Obatala, Oya, àti gbogbo wọn, they have to work to push this price below this last black line. So it has broken 1 support, 2 support, 3 support, and is at the 4th support. Resistance. What are you waiting for? So the price, of course, will not just continue to go, because this level is not that important anymore. See, it was important. They broke it here. They went up. They retested it. Okay, and they had to try it. They make attempt before they force it down. 1 and 2, 3. So they are now going up. So the price will be forced down again. It will go below this. So this will be a good area for you to what? To want to buy. This is a good area for you to want to buy. Now, I want to trade a pullback here. How do I do it if I want to trade a pullback here? That is one thing that Dr. Shaya will be looking at. That I want to trade a pullback from here. How do I trade a pullback from here so that Mushima Jawasa Lekito jealous? Okay. Me, I don't have time to be doing that. So let's see. If you want to trade a pullback here, the first thing you have to switch to what? 2-hour candle. Once you switch to 2-hour candle, let's see the information. The information we have here already is telling me that the candle is burning out because the height of this one it's burning out. Good. So it's burning out and it's a doji that is forming here. So it means that òpin ti fẹ́ dé báyìí, wọ́n fẹ́ ṣe kí ni? Wọ́n fẹ́ pull back in bẹ́ẹ̀ yẹn. So how do I engage it? I come here on my 2-hour. Let me pick my purple because I've been using purple. I come to this level, the lowest level here of the price. So to pull back in bẹ́ẹ̀ yẹn. Mama, watch. I'll continue to watch. What is going to happen now at this level? Will the price go below it or will it continue here? Whatever happens. So if the price should continue, you are not ready. This will guide me and it will always guide you. Don't join. So wait for what the price is going to do. If the price breaks down, watch. If it's going to move further down, the price will move further down. I'm teaching you. This is a secret too. And usually I find it hard to put this on social media or YouTube. We're going to more secret one. So the price, if it moves down, don't follow it. Wait for the price to make a good move. The price can even move up to this level, this height, at this level, on a 1-hour time frame. The price will first get here on a 1-hour time frame to pull back, then to go inside again. When the price goes inside again and it could not even break this one up, on this 2-hour time frame, the price will now make a move to come to this level. So that is the way you can now short a small pullback to this level. Once you short a small pullback to this level, wait for the price. The way you drew this one here, draw it for the next move back up. So, and the price probably will now go beyond it. That is how to. So for now, it's a pullback that is almost evident. On 1 hour, we will now see it clearly. You can see they are trying to make a pullback. Will they succeed at this point or not? Will they succeed at this point or not? Because if you look hard on 5 minutes is nothing. It does not make any sense to me. On 5 minutes, it doesn't make any sense to me. So this one does not make any sense to me. That's the zone. So the price, whatever happens, I'm not perturbed. I'm just watching and waiting for their foolishness. Just playing to my hand. So they can move to this point. And you that you don't know what you are doing. Want to buy you at 5 minutes, you want to join. You are in for a kill. So they might just get to this point, they move back, break, and when they break, look for your 30 minutes candle. Very important. This is 30 minutes. I will look for 30 minutes candle to close below here. Once the 30 minutes close below here, then I will come to this point to do what? To do a sell for the pullback. That the sell will come here. They will go below it, maybe to this point. If they're able to, yes, this is another good thing that you can see. You pick signs along the line. You pick signs along the line, yes. You can see on the 30 minutes, there's a previous attempt here and they failed. So if they move and they close they move below here on that 30 minutes, then I know that they want to do a good pullback to this point. So they will go below it, then they will go back here to pick you and to now make a move to this point. Once they get here, you wait for their movement upwards again, and if they're going to go up, they're going to go up probably to break this and to move up. That is what you should look for. I'm using a trade that we're not in to explain to us. Now, if you got me so far, please type yes.
Question.
Okay. You can type your question. Okay. You can tell us your question. Yeah.
Why do we need to use the 2 hours time frame?
2 hours time
and
frame.
when do we need to?
Good.
When do we use the 1 hour time frame?
Good.
You just explain to us now.
Yeah.
That when you want to place a trade.
Yeah.
Is that you use the 1 hour time frame to know exactly when they are buying or when they are selling.
Okay.
Of course, 2 hours time frame is showing they are buying.
Yeah.
But then you changed it to 1 hour time frame.
Yeah.
And it actually showed that they're about to sell.
Yeah.
Because the trend is coming down.
Yeah. Now, one thing I want you to get from here, you see, any time frame that you want to pick, they will always be doing a trend and a pullback. Any time frame you want to pick, they will always be doing a trend and a pullback. We established on weekly candle that what they were doing is to do a buy. And such a buy, because on a weekly candle, that's their trend. The kind of pips we are talking about is big. You are looking at something in the range of 1,500, 2,000, which is good for anybody that wants to trade. Now, because there's going to be a pullback at some point also at that time frame of weekly candle, we want to trade and to come down to a level and still chop something from them. So what do? We switch to what the daily candle is telling us. The daily candle might tell us that the weekly candle is becoming smaller. When it's becoming smaller, like we saw, let me quickly go back there so that I will recap on that. Let me recap on that. Now, here, they overcame, they were buying, and it's becoming longer and longer, more height and more height until this point. You see, the reason why I drew this second line here, you cannot see on weekly candle. The reason why I drew it on the weekly candle here, you can see because it was the height. The reason why I drew it here, nobody can see. Why would somebody just pick something on a thread and tell me that there's something important here? So the power of the weekly candle is to tell me that, they were doing, the trend is what? Consider this EMA 200. They are buying on a long time frame and they will continue to buy. Okay? But they will buy and they will short to pull back. Now, is this pullback that I want to get to be able to also gain this opportunity and advantage of selling to a point that I now begin to move back with them is what I'm interested in. Now, you can see all my lines are falling into places. The height here and the last black line I drew here, you can see this is where the price is. Now, at this point, from here. But how did I get to this point? So, there is an activity here that they force the price back down to this place. The price cannot get to this point again, which means they sold from here to this point. And I told you at what point will be more clearer for me to buy. There is an activity here on this trade between this point and this point that is not apparent here, which will be apparent on a daily candle. So I switch to a daily candle to see. Now the candle moved and this point. So what is apparent here on the daily candle is that I was able to plot this level, that the price was trying to force up here. They could not go beyond here. Now, for me to understand better, because I need finesse in trying to understand, because all these things can confuse me. If I look at this candle, it will confuse you. You won't know what the price is going to do. That is why the basic things, the basic level of what you can do for a swing is 4 hours. So you don't interpret your candle per se too much on weekly candle or daily candle. Now, if anybody had seen this on the daily candle, you would think that because now, maybe they have been selling. For this thing to become thin like this, with this little body here, they want to buy. See what happened? They didn't buy, they sold. And they went like that for another 3 weeks. So if you had placed your buy here, for 3 weeks, your money is in negative. So the basic things you have to do once you see your weekly to give you like, oh, they've been selling, okay, and let me see on a daily candle is like they want to sell. For me to now confirm, you now switch to 4 hour candle because we want to trade a pullback from here down to this level. You now switch to 4 hour candle to confirm. Now, switching to 4 hour candle to confirm got us to this point. We saw more information on 4 hour than even the daily candle. So I didn't see any movement here because this and this matched on the daily candle. I didn't see that. Let me do something for you to see the importance of trying to use your 4 hour candle. Dr. Shayo, I hope you are watching me. Watch this and watch this. Watch this. Watch this. Good. So
I'm watching you, my
So now let's see what now happens on daily candle. Go back to the daily candle. Can you see on daily candle? No information. This is daily candle. No information. This is what I just put here. No information. So this daily candle wouldn't have just be of help to anybody to enter any trade. If you had wanted to enter trade based on daily candle, you are considering here, and it's too late. You are considering at this point, which is too late. But meanwhile, by the time you decide, it will be too late, far too late. So that is why the essence of trying to do a finesse work to know where to enter and how to place your trade, you look at the weekly candle to give you an information. You look at your daily candle, what is happening here? Then you switch. Once we switch back to our 4 hour candle. The 4 hour candle tells me the end is apparent. So you can enter trade early. So they went up, they couldn't. So you place your resistance here. Then you look at the lower limit here. You place your resistance also, your support here. So you are watching. They broke it. That tells you they are moving down. So that means this shows, this crucial information here signifies the end of trend confirmation. Have confirmed that they are not going up any further. That means they want to sell. And this kind of a sell now is a pullback on a higher time frame. But on a shorter time frame, it's not a pullback. It will be a trend change for a long time. Maybe 1 month or 2 months. So the word pullback and a change of trend is interchangeably based on the particular time frame you are using. So we are going to see this action. We won't follow it. Now that they broke it, I can just put my entry just below the line, that when the price comes up, because they know I mean good gun at that point only my trigger or the fact that your brokers and the kind of spread when it will touch this line but it won't trigger you. So if you go a bit below it, then it will trigger you in and you ride almost 1,200 pips down like we saw. Now it's going down. When it's going to change trend, I will continue to draw my support. I drew a support here, they broke it down. I drew another support, they couldn't break it down, they moved past it. Now moving past this support, you don't have to follow it. Let them move. You see, they got to this support, they didn't bow. They went beyond it, and it was when they got there that they now decide if you had put your because they broke this one, if you had put your buy limit around this level, they will only pick you up here on 4 hour. And when they pick you up here, you must know probably they are drawing a consolidation. They pick you up here, and you would have plotted your whatever, because it's generally a consolidation. You can see the height here and the height here are almost the same. So it's generally a consolidation. And when you are seeing a consolidation on this particular time frame, they can change their trend anytime. Either they go a bit lower before they now move beyond it. That is what is happening across board now. That is what is happening across board, all the 6 pairs that we are doing. So now they went out, so you could just cash out because you're never sure of what is going to happen. The zigzag movement. So on a 4 hour, because it's what a pullback. A pullback here, they moved again, and this movement at this point in time is almost a V. From here back to here is a V, and they moved again is almost a V. When you are seeing V like this, just know that Agbara want to equal. Nothing is happening again, and maybe the sellers are not able to force the price down. And when they did this, it might just be a fake sell to tell you as if they are going. So you need an information to go and look at your weekly candle again. What is happening? It's thin, no? It's like they are moving up. And with this move. Now, the question he asked me, why did I switch to 2 hours and 1 hour? As a swing trader, I could have waited that this price is still going to come down here to pick me around here or in the middle here. This is not relevant. It was relevant in the past. They have a knack of testing their might around where they broke loose. They didn't break loose here. This was where they broke loose. So they want to push price down to that area they broke loose. So not here, not here. But if in case you are doubting, yeah, you can enter here. But when you enter here, you are a fool. You are losing money. There is no point. You are just taking risk. Entering here for a buy limit, it does not make any sense. So you can even place it around there. Most likely, most of the time, because it had broken more than 1, 2, 3. Yeah, so maybe this will be a safe place to enter. The price will still move to this region before they ascend. Now, but because I want to be smart and I still want to eat something when it's pulling back, the only way I can do that is to now look for the activity. What is happening here? Because I'm analyzing on a 4-hour time frame. To be able to shop something small, because that is not going to go past here, I can use 2-hour time frame to now see what activity, what is likely to happen. Are they going to move past here, or they are going to go down? So I now switch because it's a pullback now. A shorter time frame. I want to do a pullback to probably sell. So I switch to 2 hour. That's why I'm doing that. If you have the time, because it has reduced your 2 hour time frame has reduced your activity to what? To a day trading. It has reduced your activity to a day trading or at most 24 or 48 hours. So if you have all the time. Now, to do that, this is the level that the price could not break at this point. Then the price could not go past this resistance for now. So I want to now watch on 2 hours what will happen in the next 4 hours that the price market opens. Would they break below it? Would they move above it? So I don't have to. Maybe I may have placed my buy limit here. Get over the. I'm just looking for a short opportunity to do a pullback until they get to that point. Maybe get out around here, around this zone, before they move back up. Because I might want to use this to guide myself to an exit if I'm doing a short pullback. So I want to wait. So because I'm doing a short pullback on 4 hour, so I've seen this activity which is telling me that I think the sellers are coming in. That is why it's now thin. The sellers are coming in. That is why this candle is now thin. That is the information. The activity of the sellers is strong. They are there. So to now see very well, I switch to 1 hour time frame. Yes, I can now see them, that the sellers are there within that zone. Now, I might say, okay, if they break through it, they can break through it, but I will wait for them to come back here because they will still come back. The way they break 4 hour and re-enter, that's the way they break on 2 hours and re-enter or 1 hour and re-enter. That's what they do. So I wait, they break. Okay, I won't follow them. In case they want to do that shop, they will come back here, pick me, and come down here and deliver something for me. I'm out. So now I want to see how low I can go. If they can go up to this point, they might probably pick my buy limit, which is lower here, or I can place it here. It does not matter. And if the price didn't get to this point, to make my move back, I can just do a buy, stop, whatever. Don't always be in a hurry. Now, for more detailed analysis, you can just switch to 30 minutes to see activity around here. So, they made attempt here. They couldn't sell much onto this. So, what will now confirm their intention to do a pullback? What will confirm their intention to do a pullback that will go all the way to this point is if they are now able to break the price down here. Once they break the second one, I'm almost certain that they want to do a pullback to this level, to where they will catch me again on a 4 hour. So I can now do, once they move down, and I can put my sell limit around here, so they will come back and pick me on a shorter time frame, do a sell limit, and exit around maybe this point, or around this point of the seller's activity again. Just get out, because this point is not strong for sell. This point on 30 minutes, maybe on 30 minutes, because on 30 minutes 1 hour frame, so it's a bit strong for sell. And this area is very strong for sell. This is where I expect them to probably move back to do another upward swing. So that is why I've done this. Allow them to move down, join them again to sell to this point, cash out here, wait for actions, draw your support and resistance, and see how they want to move back up. That's the essence that I told you. I promised. I said how we use all this time frame to engage the market and the information they give us. They are not telling us the same thing. So, and now if you see anything in the market again, you won't just tell me, Dr. Volatility. And when you are doing a short trade like that, know that there is more risks from the news. And that is why I try to shy away from day trading or scalping, because I won't even watch. I don't have the time. So, but for me, I do my swing trading and position trading, which is more comfortable for me. It is only when we're in a consolidation zone that okay, we must get something per week. It's not too good to be idle. That is when I will now want to probably look for opportunity to give us so that we can get something. So, any questions? How helpful am I today to you? How helpful am I? Please type.
The second question.
Okay. All right.
Can you place a trade now for us to see how to place a trade? Can you place a trade? Because now I just want to learn where to put the stop loss.
Okay.
You know, the buy limit.
Okay.
And the TP.
Okay. Now, for me,
thank you.
If I want to do a swing trade here, which definitely is what I like doing, if I want to do a swing trade here, they made their move. That is what I've just told you. So, what I will do ordinarily is to come to this level, and I'll be using something different. I'll come back to this area in the middle zone where there had been activities around here where the body had crossed. I'll come down to that middle zone and pick a buy limit. So the buy limit, the price is 1.78178, which is a buy limit. It's a pending order on 4 hour. I will pick a buy limit in that zone. So the buy limit is 1.78178. And if I now want to pick my exit on a buy limit, what I would do is I will look at activity, either I exit my buy limit here or my buy limit here. Or if I have the time, I can wait until they want to move, because I expect the price to still get to this portion, this point of the body. Body is a very good place of, I look at this body, I can cross these two bodies here, yes. So I can make this place my TP 1.8123, 1.81232 has my TP for this buy limit. It might take a whole week or 5 days or 3 days for the price to come to this level to pick me. Okay, now I now want to put my TP. This is where the price cannot break this level. What do I want to do? I'm going to do something. I'm going to zoom out to see how important that level is. Now, they sold up to this point to come down, and this level, they were not able to break it here. They used this level also as support at this point. So this is the level I want to use as my stop loss. So all I would do, I can just put like 20 pips or 30 pips below that line as my stop loss, because that's the line that they are not able to get below for now. So like 30 pips or 50 pips below this line, most of the time, maybe 20 or 30 pips. Don't let it be more than 20 or 30 pips, because it's very important support. Look at here. Very important support here. It has been a very important support. So the price might not go beyond this. So the price is moving up. It's going to buy again. So to now zoom back. So this line is 1.766 76611. So my 30 pips is just like adding 300 to that. If I add 300 to that, it should now become 11967. So 1.76911 will now be my stop loss on this 4-hour time frame. So it means that if anything happens and the price picks me here and decide to do the unthinkable to pierce me, I won't be losing much than thinking that it's going to buy, and I joined somewhere here that it's continuing to buy, to continue to buy, and take maybe from this zone almost 500 piece lower. It does not make any sense. So I thought it's going to buy from here, then I move up here to gain how many pips? To gain, if you look at the number of pips I'm gaining, I'm gaining like 305 pips to lose how many pips? To lose from the point of entry down to this area, which is like 150, let's say 150, 180 pips. 180 pips. So I want to gain almost times 2, definitely more than times 1. But of course, I know the price will not most likely get here. And if anything is changing, I will still plot to know. What I'm making you fair low. What I'm perfect change for, I will know on time if I'm able to check and still exit reasonably than losing 50 pips or 150 pips. But I'm targeting 300. Fine. So now that is for 4-hour trader, which is swing trader. Now, as a day trader, who wants to use 2 hour, 1 hour candles? A day trader will not be placing a buy limit. A buy limit would be wrong for a day trader here. It's not a buy limit. It won't get here in a day or two. It won't get there in a day or two. So you go to your 2-hour time frame as a day trader. So what do? I'll be using red around this area. Then let me switch. I've been able to draw this line to see what will happen. So let me switch to 1 hour to see very well. Good. So I'm looking at this area as a potential point of my, if the price breaks through this area and come to this area and comes back here, so I'll be picking this one because the price is first going to move through it, and when the price is trying to do a short pullback there, that's when it's going to catch me. So I'll be doing a sell limit of 1.81032 as a day trader. A sell limit of 1.81032 here. So, of course, I will allow the price to pierce to go through. I will allow confirmations of 30 minutes candle to also go through. 3 of it must form below this particular level. And if it breaks this level down, it's more of a confirmation for me because of the activity that I saw here on a 30 minutes candle. You look at everything that you can look at to confirm. Yeah, come up. Good. So because of what happened here, so if he's able to even break this level and break the second level, is more of a confirmation for me to want to day trade and a short play. So I will now do, at this point, the price gets to this point, it's going to come back in to pick me at that level of 1.81043. 1.81043. So it picks me here. Then I expect this price to move, and this is where I want to enter my buy limit. So I will expect this price to get to this point at least. I'm not so sure. Probably if you want a bit greedy, you can pick your your exit here for a day trading. Or to be safe, you can pick this one as your exit. So the exit here will be 1.79359. 1.79359 on your sell limit. The sell limit point is this, which is 1.811043, and your exit will be 1.7359. Of course, the price, we expect the price, this is the point of high probability that the price is going to sell and give you TP. Now, the point of the price coming back to this point, the probability reduces as the price go further. So, if the price picks us here on a buy limit up, fine. If it does not and it turns back, you have gotten something here. And your stop loss for this one, mark you expect the price to break this one, no? Not that the price will not put here and you are permutating and writing the sell limit. The price must first break this level of price. It must break the level of price, which is the level now. Must break 1.80731. It must break that level of 1.80731 and like 3 30 minutes candle forming below here before you can now place my sell limit above it. So once it triggers in, it delivers me profit around there. How many pips? I'm looking at about 169 pips. That's the way I chop. If I want to chop as a day trader, I will not be looking for 80 pips. I can get my 169 pips, get out, and once I see that it has broken here and I entered, I can now place my stop loss somewhere here. So I have to zoom out to see what the price had done in the past. Oh, let me switch to more higher time frame. What is this? You go see. Let me go to 2 hours to be able to pick something there. To pick so this is where the price is. So good. So I can look for this height that the price did and just go a bit above it and put my place my stop loss there. So my stop loss will be 1.83079 because I'm extra careful. So 1.83 106, yeah, 1.83106. How many pips to stop loss? To the point of, it's almost like one in one, 164, 169. It's almost the same, but because I want to be careful, so it might not eat me. So that's the way I will place it. But some people will teach you, okay, just do 30 minutes above it. Most of the time, it might knock you off because of the volatility that might occur during the day. So they know, but it might not get here. But that place, if it's very close here, it might get you and get you out. So that is the way I will now put my, as a day trader, a sell limit. A day trader will do a sell limit. A 4-hour trader will do a buy limit. So we need to talk about risk management. When you are doing trade, we need to talk about risk management. Now, so we've been able to cover this. What does each time frame tells us? Are we in a trend or we pull back? The difference between the pullback and the trend, the types of trader you have. So the last one is what? The trade and the risk management. Assuming you have your account size is $300. Assuming you have your account size of $300, and like I told us, ideally we should do 0.01 per $50. And you want to do a trade trading. A day trader will want to risk 40 pips to gain 80 pips at least. That is what a day trader would do. Let's now see. As a day trader, on $300 of 0.01, your risk, you want to risk $4 to gain $8. That is the meaning. Your 0.01 times 40 pips, it's like you want to risk 0.01, it's like $0.1 per pip. So your 10 pips is $1, your 40 pips is $4. So to gain $8. Now, if you trade like this, how many trades can you place in case you are winning before you lose all your money? In case when somebody is losing money, how many trades can you place? So you can place, based on your risk, your $300 over $4, you can still push like 75 trades. You can do 75 trades like that. But if you use something that is bigger on it as a day trader, because it's narrow, they can chop your pips quickly. Your 0.05 means that you are risking $20. You want to gain $40. When you do 0.05 and not 0.01, because you see, $4, $8 is small for me. Let me do 0.05. You want to risk $20 to gain $40. Then how many pips, how many trades can you do like that? 300 over 20 will give you 15 trades. When your risk pip is narrow and you don't know what you are doing, you can actually lose all these 15 trades without winning anything. Now, let's go on as if you are still a bit more greedy and you want to do 0.1 on that same account as a day trader. So it means that you are risking $40 to gain $80. You have to know, how much am I risking? What's the size of my account? To gain 80, how many trades can you pick? You can only do 7 trades. The first one gave you 75 trades opportunity. The next one gave you like 15 trades, and this one is giving you 7.5 trades opportunity. Now, for the same people that owns the same account, let's see what you want to do. If you are a swing trader, you want to swing trade. It's going to take you time, maybe 1 or 2 weeks or 3 weeks before, let's say 1 or 2 weeks before the trade delivers. You want to risk 80 pips to gain 500 pips as a swing trader. So you have your 0.01. You want to risk $8 to gain $50. This risk to reward ratio is very high. Then how many trades would you be able to pick if you are risking $8? You can still do like 37.5 trades. If you are going to trade on these larger pips, lot size of 0.05, you are risking $40 to gain $250 on your $300 account. So how many trades can you pick? 7.5 trades. So the risk is more because of the number of pips, but if you're able to eat this, you gain this. And if you are now greedy on it, on one, you want to risk 0.1, you want to risk $8 to gain $500. You only be able to pick 3 trades and you're out. So it's very important for us to know how we use our risk and reward ratio and the lot size you want to use. It's better for me to use 0.01 to gain something more than use, because 0.01 might probably give me more leverage or more opportunity of taking a bigger risk, so that I save my account to gain more than taking unnecessary risk with big money and losing. I think with that said,